It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I'm your host. I'm also one of the certified financial planners on the program. And with me in the KFG studios, my business partner and fellow CFP, Josh Gregory.
Well, it wasn't too long ago when the process of getting insurance on a new home was an easy step, but today it can be a lot more challenging. When do you need to reach out to your agent, and what considerations do you need to plan for as it relates to your insurance coverage? We're going to be covering those updates and more with insurance expert Alicia Boehner on today's episode of the Wise Money Show.
I love it when Alicia is on the show.
Me too.
She is always just has so much to offer. And I got to tell you, my spirit, I'm like in a little bit of a complaining mood at the moment. So if that comes out on the airwaves, I don't want to infect you with this. But yeah, we got some weird stuff to talk about with moving and homeowners insurance. We're going to help you though. So if you have a question for the program, we'd love to hear from you. You can engage with us a few different ways. Call or text us 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com. And then all over social media, wherever you're at, we are there as well. Search the Wise Money Show. All right, here we go. Let's just get it over with. I wish we had Josh's live reaction on the show. I told him this stat right before we started recording, and his reaction was good. See if you can redo it. Okay, so we're talking about this entire show is going to be about how getting homeowners insurance on a house used to be easy, relatively, right? And it's not anymore. It's different. Everything's different. And I even saw this. We know the market is strained and so on. The average home buyer is 56 years old. That's a record high.
That is crazy.
A couple of years ago, not like, 8 years, 10 years. A couple of years ago, it was 40. And a couple of decades ago, it was 31.
Which I did the math, and a couple decades ago, it was the same people who are buying houses today, right? So same group, and what does that mean if you're not a part of that group, though, right?
So Josh, that's the second time he did the joke. I'm just going to tell you, but the first reaction is no way. That is wild, and speaks to the unaffordability and the challenges with the housing market. And of course, it's housing season right now. We'll see how it goes. Mortgage rates are finally coming down, but they're not down. So anyway, it's harder. It requires more planning than it used to, a little bit more proactive attention than it used to when you're moving.
Yeah.
So,
well, and for first-time home buyers, I mean, this can be, a stressful topic for them to hit. I have teenage kids at home, and they're still too young to really be thinking about home ownership, but every once in a while they'll bring it up and they think about, well, man, how much money do you have to accumulate for a down payment in order to buy a house? And that number is so much bigger today than when we were shopping, right?
It's kind of like back to our parents' generation.
Yeah.
The interest rates were crazy high when they got home loans in the 80s. And
That's right.
It feels like back to that.
So I don't know. I'm very empathetic to those who are not homeowners yet and really want to be. That is a major life goal, one that you should be talking about with your certified financial planner. Like, that needs to be worked into the discussions that you have.
And if you take anything away from the show, it's that moving it requires more planning than before. So work with your CFP on that. First-time home buyers, Josh, I'm pretty sure there aren't any.
Yeah.
No, I'm just kidding. The same data said the average age of a first-time home buyer is in their late 30s.
Wow.
So, okay. We've already, that's enough banter. Alicia, getting homeowners insurance is different than it used to be. And a lot of that's due to this housing market and everything. Let's just open-ended question, have a lot of discussion about it. What's different? What's different right now when you're moving and needing to get homeowners insurance?
It's just a lot harder to get. I think the team, we kind of feel like it's almost like a forensic investigation is happening on your property that you're buying now. Instead of it just being a simple phone call to your agent, you feel like the insurance company is scrutinizing everything about the property. So I think buyers doing home inspections is more important than ever, because that can give them clues to things that maybe are going to come out on the insurance inspection, which is different, right? A home inspection is different than an insurance inspection. So I think that that's kind of a good tip for people
That's
making
interesting.
sure they're doing that.
I remember when we were buying our first house and our realtor said, realtors don't necessarily love the home inspectors because a lot of times they'll find something that kind of nixes the whole deal. But now it could be insurance inspections even that all of a sudden add a fly to the ointment or whatever metaphor you want to use here.
Yeah, and the hard thing about an insurance inspection is it's not before the sale. So you secure the home loan and then you find out you can't get insurance, or that you had insurance, but oops, surprise, we're not going to let you keep this insurance because it's not what we thought it was.
Okay, so how do you prevent that?
Yeah.
Because that sounds awful.
It is awful.
So how do you prevent that before the sale? Like what's the insurance company going to be looking for so that when the insurance inspection is done post-sale, post-transaction, you don't have to worry about this?
So number one thing right now, roof is the deal breaker. A bad roof, a roof that looks like it's at the end of its life, like it's got shingles that are sliding or missing, is going to kill the whole thing with the insurance company. They're going to probably cancel that property.
Or they're going to make you update the roof.
Or they're going to make you
immediately.
replace the roof, and you just put out all this money to buy your house and you don't have any cash now, right?
Right.
Most people don't have the funds right after they purchase a property to put on a whole new roof.
And if you haven't paid for a new roof in recent years, that'll hurt your feelings, right?
It will hurt your feelings.
Yeah, it's significant.
Yeah, and so I think also when you're working with your agent, they should be asking you so many questions. So we have people come to us all the time. You're just asking me way more questions than anybody else. Almost like they're offended, like we're the forensic investigators now, right? And we are. We're doing that on purpose because we don't want what I call the unhappy surprise. We don't want the unhappy surprise at the end. We want to know about it beforehand so we can work through it and hopefully avoid a cancellation. 30 days.
You're in an interesting spot because obviously you align yourself with the client, the homeowner. You're trying to avoid them from having a bad experience or something. But you also have to be the voice of this insurance company that they may be trying to buy their insurance with. And you're the voice of them, but not the decision maker, right?
Yeah. And so I think, too, especially we have people who, like to buy flip properties, things like that. Those are harder and harder to secure coverage on. So if you have a home, asbestos is a hot topic right now in the insurance industry. We're telling people, hey, you got to take a little piece of that siding and send it off and go have it tested and then get the results back. And if it has asbestos, we're canceling your coverage. And now you don't have an option or we have to move it. So carriers are just doing a lot more work to make sure that what they're insuring is what they want it to be.
I mean, you were specifically pointing out houses that people are trying to flip or maybe fix up and rent out or something. Is that because those are often a little bit older houses and so they may have some of those materials that create problems? Or
yeah, when we see homes that have hardboard siding, if it has hardboard siding, that often had asbestos in it. Or if you have a home that has like almost like shingles on the side of the home, those sometimes have asbestos in it. So if the carrier sees that when they do their own inspection, they're almost always going to come back and ask for an asbestos test if it's a carrier that doesn't allow for that.
Okay, so when you're shopping, if you're in the process of moving or wanting to move and you're looking at houses and all that sort of stuff, you need to pay attention to the age of the roof. You need to be paying attention for those potentially older type materials that could have asbestos.
Yep.
What else?
So other things that carriers are always looking for, circuit breakers is pretty much a must. We do have some companies that will do fuse boxes, but it has to, there are certain kinds of fuse boxes that are prohibited, and some companies say no altogether. So if you have a fuse box, it's going to be a lot harder to get insurance, or it might have to be a specialty carrier. Plumbing, they're looking for PVC, copper, or the new PEX plumbing.
no lead pipes, right?
No lead pipes, no galvanized, no cast iron. Or maybe a small percentage, but the bulk has to be one of those other three materials. They want that to be updated because that's plumbing bursting exposure or lead water exposure. So those are things they're concerned about with that. HVAC, they really don't nitpick as much, but oil furnaces, if it's a super old oil furnace, they might have an issue with that. But we don't typically find HVAC to be the deal breaker.
What about the notorious wood-burning stove? I don't know how often you see those anymore, but...
So wood-burning stoves actually are not a deal breaker unless you're in okay, I'm going to use insurance jargon for a minute, but I promise I'll explain it. So a protection class 9 or 10, a protection class is basically the way the insurance industry gauges how far away the fire department is and things of that nature.
Okay. All right. So we're giving you the list of things to be looking for when you're searching for a house, because it's going to be more difficult to get insurance. We're going to tell you a little bit more about what you need to do proactively to plan ahead, and then other changes going on in the homeowners insurance world. Got that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show that airs right here on this channel, 10 a.m. Eastern time every Saturday morning, and also on podcasts at the same time, and also on a couple local radio stations at the same time as well, which is why we've got segments and why it's long form, and it's a talk show. I know. But we've got all sorts of additional content right here on this channel built just for you, just for YouTube. And 8 minutes long, 10 minutes long, something like that, all throughout the work week, taking a financial concept, applying it directly to your financial life. Have already done a couple pieces about when you're moving, the challenges that you need to be planning for, including insurance, but down payments and interest rates and all that sort of stuff. So make sure you hit that subscribe button, turn on notifications so you're made aware every time we drop new content. If you like the content, like the content. Thank you very much.
I've been wanting to ask you about the wood-burning stove, because you guys know I've been building this garage. It'll be a shop, really. Oh, no. And I want to heat it. And we live in the woods. There's so much firewood everywhere. And I thought, it'd be cool to have a wood-burning stove in there.
Don't do that.
But I do remember when we bought this house, we're like outside the range of where really the closest firefighters will come from. Mm-hmm. The ones that are assigned to our house are too far away.
Yep.
Those that are not assigned to our house are actually fairly close. So that's kind of weird. But it's tough. So you're giving me the hard no on this one.
And in the outbuilding, for sure, hard no. They really don't like it in
because
the outbuildings.
Because you aren't really going to that building as often.
Because there's flammables stored in outbuildings.
That makes sense.
Yeah.
Doggone it. Well, part of the reason...
You have 2 strikes.
Yeah, I know. We have so much firewood. Like, I was feeling like we had firewood coming out our ears, but Andrea's been doing maple syrup, and holy cow, you go through some wood when you're boiling sap. But we've got gallons of it now. It's crazy. This has been a good maple syrup year.
Bring that in and sell it.
Yeah. No, it's way too valuable to sell. No one could afford it if I tried to get our cost out of it. It's like having your own chickens. And,
how long will it take you to consume all the gallons of syrup?
Oh, I don't know.
Okay, it's like Buddy the Elf.
Got that.
Yeah.
Cool. Sorry.
It's okay.
I've been having some health stuff and trying to get some answers. And
yep.
So.
Old man Mike.
I know. Golly. So, what is this now, guys? Old man Michael Paul Roth Bernard. It just keeps getting longer. All right. So, one of the things that is embedded in here, when to reach out to your agent, and then, I'm curious to what you guys are seeing on the different. Well, we'll get into it. So,
okay.
Get ready to be stumped. All right.
Awesome.
That's right. All right. It's housing season. If you haven't noticed, we haven't had a housing season in like 4 or 5 years, but it's housing season. We're helping you with homeowners insurance. It requires more planning. The entire house purchase and moving, it's a financial planning issue. You've got to be working with your CFP, and we're helping with the homeowner side of it right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name's Mike Bernard. With me in the KFG studios, Josh Gregory and special guest Alicia Boehner. Every episode of the Wise Money Show is on podcast. Wherever you listen, just search the Wise Money Show. Subscribe to it there. Follow us there as well. You can share episodes as well there, so we appreciate that. All right, so we're talking about this, gunked up housing market. Is that Alicia approved? Alicia's got some good adjectives.
Wonky.
Okay.
You know your favorite's wonky.
Gunked up, wonky. And but really, it requires more proactive attention, more proactive planning. If you're looking to move, it feels like in the real world, you would go out and you'd look for the right features. How many garages? How many bedrooms? What area? Make an offer. Offer accepted. Start scheduling closing. A week into that process, you probably call your insurance agent and say, oh, hey, we're moving. I'm going to need insurance on this. And the agent probably said, great, and asked one question, what's the address? And that was it. And you got insurance. Nowadays, it's totally different. When should someone reach out?
Okay, great question.
To their agent. Is it like, hey, we're thinking of making an offer? Or, hey, we just made an offer? Like, when do you reach out?
Yeah, this one's hard, you guys, because so with cars, I'll give you a car quote on every car. It's easy and fast, but on a home, it's not. So your agent's probably not going to appreciate it if you call them on every single home you've looked at. But I would say once you know you're making an offer and that the offer is accepted, immediately contact your agent as soon as possible, because we want to get the quote going and we want to kind of start the process of seeing, are there going to be any red flags? That said, if you look at a house and you are a faithful Wise Money listener and you have heard that there are some things and you're like, I just wonder if this is going to be a problem, call your agent before you make that offer. We can get photographs. We can ask you to do some pre-underwriting. It helps us so much to have it ahead of time. We can get that approved before you make that offer and kind of know what you're dealing with, whether you're going to run into issues or not.
Yeah.
That's good.
And so we already said, just if you're catching us right now, age of the roof, like while you're out there looking at the property, and houses are so emotional, you're going to fall in love with it. You might not even get it. Like it's a hard process. I don't enjoy it. I would say in order, I hate buying cars and then I hate buying houses. Like, and then maybe after that, I hate buying shoes or something like that. But it's awful. It's not fun. You get emotionally attached to it. But before you do, find out how old's that roof. What's the piping like? All the
mechanicals.
Yep, and all that sort of stuff. So, curious. And this is where I said I might stump you. There's 3 different values people need to be aware of, and it's not like you need to be obsess about these things. But market value. What are you going to pay for the house? What's it worth? Okay, and that's really important. But you have to connect that to kind of appraised value. Right. Mm-hmm. And so a lot of times you might need to pay more than what it will appraise for, and you'll have to pay more for the down payment, but you can't get a mortgage on that higher amount, blah, blah, blah. And then insured value. And so that's sometimes different. With the cost of building so much higher these days, have you seen a big change in that? Are people buying a house for $500,000 and immediately they've got to cover it for $600,000?
Actually, we usually have the opposite issue.
Really?
So when we run into issues with insurance, it's more often something like a lake property where they're paying this higher amount for that lot. Mm-hmm. We don't care about the lot. We don't care that you're on 50 acres or that you're on a specific lake. That's not the value. The value is the cost to build the home. But the lender wants their mortgage loan protected. And now your insurance limit is far lower than what your appraised value is or your loan amount might be, because you're paying for the lake, the scene.
Right.
That's right.
So that causes us issues.
And a tornado is not going to wipe that away.
Yeah, that's right. So if there was a fire or a tornado or something that created a total loss of that building, you don't have to replace the lot itself. You can build again on that same spot. And so you're not insuring the value of the land. And good example, the lake property being one where that can add so much to the purchase price, but not really add to the replacement cost or the amount of insurance that you need to buy.
The other time we have issues is when we have, they call it insurance to value. So say the market value of the home is only, $150,000. But
not possible. There's no homes left for $150,000.
You might want to go with $250,000.
$250,000, and then the rebuild value is $500,000 because it's an old big home in maybe a neighborhood that just doesn't sell as high. Then we have an insurance to value issue where the carrier's like, hey, we don't want to insure this thing because the cost to rebuild it isn't even close to what the appraised value or market value is.
Yeah, that old saying, they don't build them like they used to. They don't put the kind of crown molding and other woodwork throughout these buildings. They don't build them quite as large as they once did, maybe not as many windows as they once had. And so to replace that exact house would be really expensive. I do wonder, well, how many people build, the exact same thing again.
And you have a way to deal with that with this thing called functional replacement cost, where you're basically saying a modern day equivalent, but that still doesn't usually move the needle enough to make up that ground when we're in that type of situation.
Interesting.
So like painted styrofoam for the crown molding, like that's functional. Like is that what people are?
I don't think that's really what they mean,
okay.
and nor is that what they get. Thank goodness we
Okay,
haven't
good.
had that complaint yet.
All right. Okay, so let's flip the script a little bit. As a planner, and Josh, we can remember these days. It's always financially safer, less risky, easier financially to sell and then buy.
Yeah.
To sell and then buy. This isn't advice, but it's almost like you can't do that now. If you're moving or if you're looking to buy a house for the first time, you're looking for certain features. And yes, there are areas right now in Florida and in some of the more metropolitan areas where there is, Washington, D.C., there is a lot of homes on the market, big inventory. But that's not pervasive.
Yeah.
Most places, I'm moving because I've been stuck in this house with 2 bedrooms and kids are bunking up. We need 3 bedrooms and we need certain features. So as soon as that's available, I got to buy it. Now, from a down payment and other things, gosh, this is where you need planning because that requires a lot of creativity, especially if the average home buyer is 56. That means you're near retirement. Are you pulling funds out of your IRA? How are you making the down payment?
Yeah, I mean, that's a big part of the tactical planning that your certified financial planner might help you with. If you've got a big life goal to go buy a different house, to upgrade your house, to move to a different area, that sort of thing, the logistics on how you pull that off can really be tough, especially if we are in a market where, boy, you don't want to let go of the house you have until you know you have a place to land, right?
Yeah.
I mean, how many people got burned that way during COVID, where, they've got so many people clamoring to buy their house. They feel like, man, I could sell this thing at a premium, and they go ahead and put it on the market, not realizing that thing's going to sell in hours, not days.
Yeah.
And when that happens, now they're on the clock to go find somewhere to land themselves. And they enter into the same bidding war process that benefited them as a seller. Now it's kind of a hindrance or a risk to them as a buyer.
So let's talk through the insurance side of that. So you're buying before you sell. Any issues with getting insurance on a second property while you still have your other? And then how long before the old house becomes vacant and you need to change your insurance? And we might need to take a break here, but go ahead.
Yeah, so owning the 2 houses at the same time isn't necessarily the issue if we can call one a secondary or seasonal residence. But you hit the nail on the head. Where we enter the problem is you've moved out and now you have a vacant property. And most of our insurance companies deem vacant somewhere between 60 to 120 days. That's a big span.
Yeah.
I'd say more carriers, it's 60 days. The 120 was very liberal by one of our carriers. But
So once you've been out of the house for 60 days with some carriers, they call it vacant. And what does that mean then for the homeowner?
So what that means is they're going to now restrict how they cover certain claims on that home if you have a loss. And for us as agents, it means they really don't want to be writing that anymore.
Yeah. I want to pick that back up, but I saw this stat recently that the average length of time that a house is on the market has been ticking up. We're about at a month. Last I saw it, now that could change really quickly, but it was at 2 weeks, and now we're at about a month. So we'll see. So we're going to dig more into that and more coming up on the Wise Money Show with Korhorn Financial Group. Sometimes, Alicia, when we're going to break, I like to say, all right, we got that. We got more, and we got that more, and more. More is coming.
We got more of that.
So it's funny, Josh. I think you said a long time ago, like some of your phrases and sayings are almost like like pre-recorded in your brain. You like, and so you just have to press play, and then you just say what you've said. Mm-hmm. And I got that going on
Do
with
you
the
say
show.
that in your sleep?
No, I know, but
Do you have dreams?
But it's like,
and
okay,
I
then
need to have
more.
Cindy on the show sometimes.
no, yeah. I mean, it'd be a different show.
Let's hear more about at home Mike.
Yeah, but when it's time to shut it down, it's like, okay, just play the closing. And if I didn't say the right words right before that, it's going to come out wonky.
Wonky.
All right.
Pretty sure I could do it too.
Yeah, I bet. So.
And all of our receptionists in the lobbies who hear it all day, every day.
So then we'll get back to topic, but just so you guys know, right? I mean, Lindsay has to listen to me talk for 3 to 4 hours a day.
Poor Lindsay.
Every day, at least every day. And then the folks that are the receptionists in the lobby, we've got the shows or Next West Step videos
playing on the TVs.
So they have to listen to it for 8 hours a day. I mean, that is torture.
That does sound horrible. And I love you. I like talking to you, but I wouldn't want to just be listening the whole time. I'm sorry.
No.
I mean, even your favorite song gets old, Mike. Even your favorite
Yes.
song.
My inner monologue now sounds like my.
Yeah, that's right.
Oh,
Lindsay has a Mike Bernard sitting on her shoulders when she's considering
it's
a
in
decision.
her nightmares. She hears Mike's voice in her nightmares.
Jeez.
That's funny.
All right. So third segment. And then let's pick this issue back up because we were just getting started. And then at some point we'll meander into what can be done to lower your insurance. So, all right, here we go. Helping you navigate getting homeowners insurance. Gosh, keeping your homeowners insurance on your existing house. But then if you're moving, what's the process like? What do you need to be aware of? How's it different right now? We're helping with that right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name's Mike Bernard. With me in the KFG studios, Josh Gregory and a special guest, Alicia Boehner. Also want to thank Auto Owners Insurance for sponsoring the content of today's program, focusing on homeowners insurance and helping you with moving and all that sort of stuff. Every episode of the Wise Money Show is on the YouTube channel as well as a lot of other content. So go to YouTube, search the Wise Money Show, subscribe to it there, follow us there as well, and you can with thumbs up, you can share episodes, you can leave comments and questions. That's where we get a lot of engagement. So go to YouTube, search the Wise Money Show, and subscribe to it there. Okay, so Lisa, we were talking about the issues with needing to buy a house before you sell. Now, with such a competitive housing market, you'd think, well, you'd then be able to sell your house quickly. But I mentioned right before break that we're seeing those times tick up. So let's go back to, if you buy your house, oftentimes it's an issue to get a mortgage because you still have a loan against your old house. And now you've got to get a loan for a new house. And I'll share in just a second the percentage of someone's income that's going towards their housing is at a record high level. It's never been higher than it is right now. So from a bank standpoint, they really care. But an insurance company, they don't care. They're okay with you having two properties for the most part.
Yeah, if you have two properties, as long as you actually live in both properties, they're okay. It's when you really aren't living in one and it becomes vacant. Insurance companies, most companies that we think of as like a standard company, they don't want to write vacant homes. And so that kind of puts you in it starts the ticker, right? The clock is ticking and now you need to get that house taken care of, or you have to move it to what we call more of an excess and surplus market that's more costly and secure a vacant home policy.
Okay.
And that vacant home policy, it's not going to be cheap. And you may or may not get all your money back. So you're going to have to pay for a year. You might lose 25% of the premium. You might lose taxes and fees on it. So there's just some things about that policy that are less desirable. And it's not going to cover as much as a typical home policy would that you're occupying the home.
Yeah.
Man, that does, like, my risk radar is just going off right now because when we were talking about how do you avoid getting stuck maybe with two houses, that's a big fear for those who are selling.
I'm never moving again. I'm pretty sure after this discussion.
Andrea's declared that too,
okay,
actually. But no, if your cash flow is tight because you're trying to carry two mortgages or you've liquidated some investments or something to try to bridge the gap while you're buying the new house and getting rid of the old house. But then all of a sudden to get this curveball thrown at you that, hey, you've now had the house on the market for too long. You've been out of the house for too long. It is now considered vacant, and therefore the insurance is completely changing on you and maybe getting more expensive. it's like that feels like another domino in the nightmare scenario.
Well, and consumers are smarter than ever, so we have people getting very creative. They're like, hey, how about if the person that's gonna buy my house just moves in now before closing? We've got people asking if they can do that. And now we're changing the occupancy of the house. So we have these problems where people are trying to be creative and solve the vacancy issue a different way, but all of it results in, we can't do that, so we're the Dream Crusher. That's my new title, Dream Crusher.
Yeah,
More
great.
common scenario that I'll see would be one spouse is maybe staying back in the prior home in town, letting the school year finish out for kids, while the other has moved, out of town for a new job or something like that. And you're just living apart during the week for a little while, seeing each other on the weekends, that sort of thing. But that's one way to avoid the vacancy issue.
And
right?
that's a good way to do it because you still have stuff in both houses, right? You have to have stuff in both, and they're going to look at that. That's also a factor in vacancies. Do you have enough stuff there to actually live there, or do you not?
Okay, so you guys are smart. You're listening to the show, but you probably already connected the dots. But when it comes to okay, I'm buying first, and then now I need to sell my house. All those things that we told you to be looking for from an insurance standpoint in the new house, you also need to be looking at your existing house, because if potential buyers for your home are going to have a harder time getting insurance because the roof is old, or the pipes are made out of putty or whatever, then you've got to be aware of that, because this could impact. So is it the same list, Alicia? How old's your roof? And gosh, that would be awful. I'm buying a house and I need to update the roof, and the one that I'm selling, I need to update the roof. That one hurts.
Yeah, the roof is probably the biggest recommendation I can give, because that is what kills the deal most of the time, is that roof right now. But all those same things, also just basic maintenance things, making sure your bushes and stuff are trimmed back, make sure it looks decent. Most of the time people are doing that before they try to sell anyway, so we tend to not see that as much.
It's interesting though. I'm kind of, as I'm listening to you guys, I'm amending my own sort of checklist of things that I would advise a client to do before they put their house on the market. I would always instruct them to talk to a couple realtors, have them go through the house, figure out, are there any of those things that would help make the house more marketable? But now you're kind of persuading me that maybe it needs to be reviewing the house through the insurance lens as well. As Mike was saying, make sure that you're not going to have some of those deal breakers as you're finding a buyer for the house.
Yeah, and sadly, honestly, more of the time what we see are agents who don't ask the questions up front. They secure the insurance, the closing goes through, and then whoever you just sold that to gets the rug pulled out from under them. So on the selling side, I'd say you're probably in a better position than on the buying side from an insurance perspective. Be more careful as the buyer.
Interesting.
All right, here. I'm trying to look for this stat, but yep, just found it. Okay, guys, we are at, we've been talking about housing affordability. That's really pushing all of this. And in a moment, we're going to talk about some of the big disasters that we've had and how that's going to affect or trend things in insurance. But housing affordability is the big catalyst to all of this. We are now at a record high percentage. I mean, nominal dollar, well above records, but percentage of someone's income that is going towards their mortgage. And by mortgage, that's principal and interest, as well as escrow and PMI. Escrow is your homeowner's insurance and your property taxes. We know property taxes are up. Oh, by the way, that's another value I didn't mention earlier. Your
assessed value. I was going to point that one out. Yeah.
Thanks for not hurting my feelings. We are now at 47% of someone's income that has to go towards their mortgage on average. That is a record, and yeah, golly, that's a lot. What can you do to help manage and keep that homeowner's insurance premium low?
Deductibles have to go up. It's a trend in the industry we're seeing. It used to be a $500 home deductible. Back in the day when I started insurance, now I'm the old lady. Now $2,500 seems to be more of average, and I think wind hail deductibles are going to be the new norm. I don't like them personally, but I think it's going to become the new norm.
Meaning that you have a separate deductible if you're making a claim related to hail or wind damage.
Yeah. And which really, what is that? Roof.
Yeah.
That's your roof.
Yeah.
And so the wind hail deductible is usually anywhere between 0.5% on up to 2%, 5%.
Of the value of the house?
Correct.
What?
Yeah.
Wow.
So do you just metal roof this thing? Is that like...
That doesn't help you necessarily
Does
with
it
the
help you on your
carriers that
insurance?
require that wind and hail deductible. A metal roof will help a little bit. But I would say things to save money, deductible, look at that. Newer roof, that is a big discount. If you can bundle, we're seeing fewer people being able to bundle because of the tight property market. That can help you.
Bundle Rooski. I told you, the insurance commercials are my favorite. They're hilarious.
Bundle Rooski. I haven't even heard that
Oh,
one
my
yet.
goodness. You're missing out.
I don't watch a lot of TV. But
Okay, the Chiefs. And people, I love to hate the Chiefs, but some of those commercials are pretty funny.
Yeah.
Okay, so, everyone's got Ring doorbells. Does that account as a security system? Are there any deductions for those anymore?
you can get what's called like a local alarm discount, but it's just not very much.
Oh, really?
Yeah, it doesn't really help you a ton. 1% to 2% maybe.
Okay.
That'll pay for the Ring doorbell.
There you go. Okay. I'm going to put you back on the spot with this, though. So come up with a few other ideas because you didn't give us enough on how to keep those insurance premiums low. So we'll pick that back up. But I'm still looking at this chart here. 47% of your income needs to go towards your housing payment. Guys, 10 years ago, that was 26%.
Whoa.
26%. So, all right, we've got more coming up here on the Wise Money Show with Korhorn Financial Group. I can't believe that. I'm looking at
That
this.
is hard to believe, to be honest, because most banks won't let you go that high.
They don't, I feel like they just are printing money.
The median American household would need to spend a record 47% of their income. Would, I think that's the key. Would need to. Meaning, that's
So-
right. Banks
so-
aren't letting you go that high because people aren't moving
Interesting.
because they can't afford it.
Yeah. So if everybody had a house and we're trying to afford it on a
Yeah.
typical American income,
Oh, I see.
then it would take that much.
Back when we bought our house, I'm just going to tell you, it was, okay, 2 paychecks a month. One paycheck goes towards the mortgage or rent. The other paycheck is what we live on. And I feel like if you say that to someone today, especially a young person in their career, they're going to think you're crazy.
Yeah.
But that's just what it was. But this is worse than that because that was 50% of my take home. If you've got 7.5% going to FICA, 7.65 to be precise, say you're withholding 5% for state, 10% for Fed or something like that, like this math doesn't work. That'd be almost 2/3 for a young individual, young professional. Almost 2/3 of your take-home income is going towards your mortgage.
Yeah.
Insanity. What are we? This is Canada. Are we in London?
It makes you wonder, are more and more, especially younger people, going to be kind of stuck renting longer than past generations? And, a lot of builders are building houses to rent, like not just apartment complexes, but they're building duplexes and other things like that just for the purpose of renting. Most new houses are to sell. Right?
But the rent is just as expensive.
So
it feels.
one of my former colleagues, she purchased a manufactured home like in a mobile home park and fixed that thing up just because she knew she couldn't afford the down payment on what they wanted. And she said, well, you know what, later on we'll be able to rent this out. And I thought, well, that's actually a pretty smart way to do it as a young person. You're at least, getting some equity and establishing credit. And
Yep.
All right, so I was teasing, of course, about give me more stuff. So if there are any other,
I can.
Okay, cool.
We can.
But then I also, because I got this question recently about floodplain,
Oh yeah.
and then that flows right into natural disasters, which is probably where we'll finish. So, all right, 4 segment, land and plane. All right, here we go. Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. With me in the KFG studios, Josh Gregory, and special guest insurance expert Alicia Boehner. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com, and then all over social media, wherever you're at, we are there as well. Search the Wise Money Show and engage with us that way. Talking about the housing market, how it's just difficult, and it requires more planning. See, I told you, I warned you at the beginning. I'm going to sound like I'm complaining today. It's just harder. And I'm not complaining because it really just requires more intentional structure to your financial life. I mean, you need to be making sure that your present financial position, which is your cash flow and down payment and how much debt you can service and all that sort of stuff, you got to make sure that that is cleaned up, but that's connected to your protection planning, right? Connected to your tax picture and your insurance. Like, your financial life is more integrated than you can imagine. And not that buying a home was ever easy. Getting insurance was. Neither of them are easy right now.
That's exactly right. And I'll just point to one thing that we left off in the last segment. You had talked about how, talking to Alicia here, if you're trying to reduce the amount of premiums that you're going to pay on your home for homeowners insurance, you may want to be considering increasing your deductible. But the higher the deductible that you have, the more risk you're keeping on your own shoulders. If something goes wrong with the house, you're going to cover more of that upfront cost before the insurance company comes to your rescue, which means you need to have your own game plan, your own safety net that is much larger than in the past. So, probably far more than $2,500 earmarked for emergencies related to the house.
Yeah.
Because there may be some things that just go wrong when you're a homeowner that have nothing to do with insurance. The furnace goes bad. That's not an insurance claim. That's just a maintenance issue. The life of that appliance, so to speak, or that system kind of ran its course, and now you need to replace it. And that's significant. So it's, I'm not trying to, add to the woe is me type feeling, but you're right. It's hard. And you need to be thinking very closely about, before I enter into home ownership, I need to truly consider all of the costs. And it's not just the mortgage payment. It's not just, can I afford the real estate taxes and the homeowner's insurance? Can you afford all of the other stuff that comes with it, especially if things go wrong?
Yeah. So going back to affordability and what can you do to help keep a lid on your homeowner's insurance premium, that cost. So deductible is a huge one, but that goes right back to what Josh was saying. Your entire financial house, not just your house, but like your financial strength and stability is going to determine, well, how much deductible can you absorb? So that's key. What else?
So your insurance score. And probably your most predictable guest that you have on the show. We've talked about it before, but your insurance score, which is a little bit different than your credit score, but similar. That is something that you can control and have influence over, making payments on time, making sure you don't have so much debt that the carrier's worried you wouldn't be able to make your insurance premium payments, things of that nature. So that's a good one.
Can I ask a question about that? Because, if this was a show about car insurance, we would often talk about how important it is to not make frivolous claims and how you need to pay attention to your insurance track record or history because they've got a file on you, right? And what are your behaviors as far as turning in the little fender benders and stuff like that? How does that work with homeowners insurance? Because if you have a claim in one house and you sell it, does your history follow you into the next house? Because it's not like, I'll take myself as an example. You guys know we had a major claim a couple years back because we had a burst pipe while we were away from home and just flooded the basement. So lots of cost to put everything back together again. That was a problem with one pipe in one house. That is not necessarily the same problem that's going to exist in the next house that we own someday. So does that type of a track record still kind of penalize you, so to speak, when you do swap houses?
Yeah, the carrier does look at the type of loss because there are certain property losses that could be specific to your home, right? Where you're located, you could be more susceptible to wind loss, maybe not. But tree branches falling on your home, definitely something, right, that could be impacted. Water losses, for sure, water backup claims. So things like that. So the carrier does look at that. And you had your crystal ball out because that was the next one I was going to suggest is absorb as much as you can and try to not, we've talked about it before, insurance is for the big things, right? We don't want to use insurance for the little piddly stuff because if you show multiple home losses right now, you're toast. You can't even get coverage.
Right, because you're demonstrating a propensity to go to the insurance and try to get into their wallet to cover things that maybe could have been a maintenance issue or something preventable if you were staying on top of it.
Well, yeah, and you have to think about the fact that these insurance companies have their little arsenal of nerds with their calculators and their glasses out, and they're punching their calculator frequency and severity, frequency and severity. You've shown the frequency. They're waiting on the severity. The big claim might follow.
I am personally so offended by that. Lisa. Okay, that goes right into my next question, which goes right into sort of the last topic, and floodplain. I had this question recently. A friend said, okay, wait a second. I don't think I'm required to have flood insurance, but it says that I'm in a floodplain. Do I need flood insurance? How does this whole thing work?
Okay, so this made me smile when I saw this because everybody's in a floodplain.
That's what I remember you saying that. Okay.
We're all in a floodplain. It's just, are you in an area that's more prone to a flood loss, or are you not? Mm-hmm. And if you meet that requirement of being in this severe hazard area, then you're going to be required to carry flood insurance on your mortgage or your commercial structure. And if you're not, you may not be required.
So that's another thing to look out for, when you're looking to buy.
Yeah, and usually that one's very well known because the mortgage company is promoting that immediately, telling you, hey, we're going to need flood insurance, usually.
And that's what I was going to say. It's the mortgage company that would require it because they're trying to protect their interest, right? They don't want this house to be ruined, and they've got a whole bunch of capital tied up in it and no way to recoup.
Yeah, this is the one where I get the free pass. I am not the dream crusher on the flood. I'm not going to be the one that tells you have to get the flood insurance. It's going to be your mortgage company, not me.
You still have that.
But in all other ways, you are the dream crusher.
But in all other ways, I get to be the dream crusher.
All right, so we've obviously had, I don't know, we're talking about insurance, homeowners insurance, and if you zoom out, boy, have we had a bunch of natural or unnatural disasters nationwide. You talk about the wildfires in California, the hurricane damage and flooding in Florida and Carolinas and everything in between. Alicia, do you see that impacting insurance nationally? Are prices still going to be going up because of that? Some of the large national carriers had just gone through and were cutting people's coverage, and then this happened. So is this going to get worse? Just maybe a few comments on the overall trend due to these really big, awful things that have been occurring.
I wish I could tell you guys we're done. I don't think we're done. So I've got, I'm good for a nerdy stat. $154 billion in insurance losses, insured losses in 2024. And that surpassed the recent 10-year average by 27%.
Oh, my.
Wow.
And then also 2024, we had 21 separate incidents that broke a multi-billion-dollar loss because of how severe they were. The past records were 17. And those records were for the year of 2020 and 2023.
Oh.
And you might be listening and thinking, well, that wasn't in my neighborhood, right? Like, I live in a pretty calm, the Midwest. There's not a lot of terrible things that happen in the Midwest here.
Okay, no. So severe convective storms, a.k.a. tornadoes, pop-up storms, 41% of insured losses. Hey, where's that happen? Right here, you guys, in the Midwest, the good old Midwest.
Okay, so we're wrapping up. So a quick comment, Alicia. You don't think we're done, meaning insurance companies are likely going to have to, they've got to be raising rates for this. Is that what you're saying?
Yeah, so we're still going to see carriers taking property rate at least this year, and what I'm hearing is probably next year too. We're still going to be taking property rate increases, unfortunately.
And why we, Alicia, and our team, you need an independent insurance agent, right? Because we work for you and not for the company, but yeah, expecting those rates to go higher and expecting potentially more larger carriers to say, hey, we're going to drop coverage. They're, again, working with an independent agent, someone who's actually on your side. And if you do get some bad news from one of the companies, that's not their only solution. They can go out and find another solution for you. So make sure you're working with your CFP. Make sure you're working with your independent agent on that. So, all right. Thanks for being on the show, Alicia. Hopefully the next time we talk about a better topic. That's all the time we have for today. On behalf of Alicia and Josh and all of us at KFG, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management LLC. Doing business as Korhorn Financial Group. KFG Wealth Management LLC and Silver Oak Securities Incorporated companies are unaffiliated.